Well, thank you, Nifemi. Nigeria's oil production surged in February, exceeding its OPEC quota of 1.5 million barrels per day by 70,000 barrels per day. This information comes in from Reuters. According to the report released on Wednesday, Nigeria recorded the second largest production output among members of the Organization of Petroleum Exporting Countries. OPEC reportedly pumped 26.74 million barrels per day last month, up from 170,000 barrels per day from January's position, with Iran contributing the highest output of 80,000 barrels per day. Nigeria's production increase is attributed to rising crude oil exports and domestic consumption, especially with the 650,000 barrels per day Dangote refinery coming on stream. OPEC Plus, a group that includes OPEC, Russia, and some other oil-producing partners, is keeping production cuts in place through March because of concerns about weak demand. And the federal government has pledged its commitment to implementing the end-of-life vehicle regulation aimed at protecting the environment and transforming waste into economic opportunities. Minister of State for Industry, Trade and Investment, Senator John Eno, made this known at the stakeholders' engagement in Lagos, put together by the National Automotive Design and Development Council. He said Nigeria has the potential to develop a multi-billion-dollar industry from waste, creating valuable economic value chain. Senator Eno said the sector is worth more than $60 billion globally, insisting that Nigeria cannot be left out. Minister commended NDDC's Director General, Mr. Joseph Osonipi, for advancing Nigeria's automotive industry. Meanwhile, the Federal Competition and Consumer Protection Commission has instituted a legal action against MultiChoice Nigeria and its Chief Executive Officer, Mr. John Ugbe, for violating regulatory directives. This is contained in a statement by the Commission's Director of Corporate Affairs, Mr. Onaje Ojagu, in Abuja. The Commission also charged the company for obstructing an ongoing inquiry into its activities. According to the Commission, MultiChoice proceeded with its price increase on March 1st in a clear defiance of the Commission's directive. The Commission added that the company had not only flouted regulatory processes, but demonstrated a pattern of conduct that undermines consumer rights and fair competition. As the digital economy continues to grow, the focus on robust cyber defenses have been described as crucial in ensuring the safety and security of both businesses and their clients. And in the light of this, that a cybersecurity business analyst, Mr. Innocent Ojo, wants business owners and organizations to adopt a proactive approach to cybersecurity.
The pressing vulnerabilities include misconfigured cloud resources, which remain one of the most leading causes of cloud breaches, and this is very critical to the growth of every business. For example, identity access management weaknesses, such as, say, overprivileged accounts or poor API security also pose significant threats and risk. We can refer to these as very high level risk. And in addition to that as well, businesses should be aware of container and Kubernetes security flaws, insecure CI and CD pipelines, and supply chain vulnerabilities. They're quite high in this case as well, And then we also could look at, very critical area like the growth of the business as well. And this is because even more organizations rely on serverless computing and edge computing to make day-to-day business easier and even smarter. And some of these will make new attack surfaces emerge in the nearest future and requiring enhanced security visibility and proactive risk management. These are quite some areas that we really need to evaluate extensively.
Asian stocks rose today as investors helped out hope that trade tensions could ease after U.S. President Donald Trump exempted some automakers from tariff for a month, while the euro stood tall ahead of a European Central Bank's meeting. Japanese government's bond fell sharply after German long-dated bonds were swept up and their biggest sell-off in decades as parties in talks losing fiscal rules. U.S. stock surged sharply higher, shoring up Asian markets. MSCI's broadest index of Asian Pacific shares outside Japan was 1.2%, while Tokyo's Nikkei gained 0.9%. Futures indicate European markets are set for higher open, as well as Pan-European Stock 50 futures up 0.7%. German DAX features 0.3% higher. China and Hong Kong shares rose a day after Beijing set an ambitious economic growth target and vowed more support for domestic consumption and technology industry as a trade war with the United States ratcheted up. Chinese blue chip index rose 1%, while Hong Kong Hang Seng index soared nearly 3%, hitting its highest level in 3 years. DHL Germany plans to cut 8,000 jobs this year as a strategy to save more than 1 billion euros, that's $1.08 million in 2027. This is coming after the logistics group reported a 7% fall in annual operating profit. DHL CEO Mr. Tobias Meyer told journalists the job cuts represent more than 1% of the total workforce, which will affect the Post and Parcel Germany division. The company shares have underperformed the wider logistics sector over the past year, falling nearly 11% by Tuesday. According to Meyer, the new stamp price guidelines for Germany's network regulators are insufficient to address these issues. The company recorded 5.87 billion euros in 2024 before tax, surpassing analysts' expectations of 5.81 billion euros. For 2025, the group expects an operation